The Central Bank of Nigeria has released its consolidated financial statements for the last 7 years amid an investigation into its financial management. The long-awaited statements had raised concerns about integrity in the Apex Bank's financial structure. Now, the financial statements released were from 2016 to 2022, when the CBN should be publishing its financials within 2 months after the end of each financial year, which makes this situation a violation of the CBN Act 2007. So what's in the report? Nigerians have found out that the CBN owes JP Morgan and Goldman Sachs a combined sum of some $7.5 billion as the financial year ended December 2022. This latest revelation is coming to light after President Bola Tinubu appointed a special investigator, Jim Obazi, to probe the CBN 7 weeks after the suspension and arrest of Godwin Emefiele. With me on this conversation is Gospel Obele, Chief Economist for Streetnomics, and of course, a friend of the house. Gospel, it's good to see you again. Thank you so much for joining me.
Tolu, good morning.
I think we need to start with the fact that this release of the audited financial statements of the CBN, which is coming with 2016 to 2022 statements, is very much a clear violation of the CBN's own act, which lays out the rules for submitting, publishing its financials. So starting from there, how should this have been handled when it was very clear that the CBN was flouting its own act as well as the Constitution?
Well, I think to a large extent it's subject to the fiscal policy authorities in place at the moment, and how functional are the legal frameworks that are, in place as well to double check the activities of the Apex Bank. There is almost nowhere in the world where you find a situation where, the Fed or the Apex banks are not double checked, or there's no audit committee or legal committee who is, ensuring that the necessary checks and balances are happening. But however, to a large extent, what we see today is to a large extent the functions of so many leakages at work in the Nigerian economy, and the fact that our legal and institutional frameworks are not yet firm enough to ensure that the regular checks and balances across institutions are in place. And it's not just a function of the central bank. We've also seen that to a large extent in many NDAs in Nigeria. If we were to go deep dive into accounts and investigations, we'll see a very strong similar pattern across board. So it's largely built on the questions around the quality of institutional and legal frameworks like checks available, and then how much of will I use the word support mechanisms are also in place to ensure that institutions are not flouting their own rules, or to a large extent the constitutional elements as well. It's also important to state as well here that in the case of the central bank, over the years, we've had a very strong overlap of, fiscal engagement with the monetary bit. We're seeing the questions around the central bank trying to bail out states, roll out projects or engagements that are largely fiscal dominated. For instance, investment to the creative sector and all of those anchor borrow schemes and the like. So the Apex Bank has also taken more than it can chew to start with, and that places it in a position where there are room for leakages or a misalignment or a breach of constitutional representation or acts in one way or the other. So to a large extent, I'm not so surprised about the news, because it's to a very large extent the possible case scenarios if a comprehensive investigative audit were done across MDAs and Apex institutions at the moment right now in the country.
And it's very interesting you talk about sort of the overlap, and I guess we'd say the extension of the responsibilities, the CBN taking on much more than it should be, quote unquote, responsible for. But let's get further into these financial statements. So 2016 to 2022, this is also the time where now the embattled, suspended CBN Governor Godwin Emefiele was in charge of the CBN. In terms of what the report is telling us that we don't already know, a lot has come around and has come out since he has been suspended and under arrest. But what does this report now tell us that we didn't already know about his time at the helm of affairs of the CBN?
I think the patterns of insights and events that have been unfolding recently just shown to us that there's been a very gross, consistent mismanagement of the economy and its finances, for the last almost a decade now, close to a decade now. And again, big ticket questions around how other players within that same ecosystem may have in one way or the other, facilitated the state of this mess in one way or the other, and all that. So it also tells us that lots of cleaning up has to be done internally. To a large extent, trying to also find a win-win across the stakeholders involved, because the root causal elements of leakages run deep into how these institutions are designed in the first place. All right. So if there's some form of enablement from the fiscal side, then it also requires that some form of investigations has to also cut across the fiscal space as well. All right. So it just tells us that lots and lots of events have played out in the Nigerian economy that we don't know about. And lots of compromise and win-win will have to come into the fore if any form of attempt to clean up would happen. And it's safe to also say that that crisis or that leakage has also spread across other institutional stakeholders. When you think of banks, capital markets, and all that. So the leakages are very deep. However, you can't survive or succeed at trying to close leakages only. You have to rethink on how to use those leakages to grow the strength of institutions in the first place. Because these leakages also are everywhere in the world. All right, there are many other commercial banks also suffer the same impact or weight from the top private banking institutions in the world. All right, their big narrative around quantitative easing, the age of currency wars, and how the next wave of currency wars are built largely around funding, deposit, securitization, and all that across commercial banks. So what we see today is not just one layer of leakage happening right now in Nigeria, but there are other layers of leakages happening across board. All right, especially when you look at it across the emerging, frontier, and advanced markets as well. So top of mind would be to deal across this situation from a win-win, looking at the early compromise that can be, fixed in terms of, ensuring that the interests are brought to the table and we facilitate the growth and strength of the sector from here going forward.
And as you can see on the screen, there are some interesting points coming out from this particular, the financial statements. There are, of course, some pluses there, seeing the CBN declaring a profit after tax of about 103.8 billion naira in 2022, which is up from around 75 billion the year before that. But this borrowing of money from from JP Morgan and Goldman Sachs, that is a lot of the questions that people have this morning. So the CBN borrowed around 3.1 trillion naira, which is about 7 billion, and 230 billion naira, which comes to about $500 million from these big global lenders, JP Morgan and Goldman Sachs, coming to a balance of 3.3 trillion, which is the $7.5 billion. So, Gospel, do we know what this money was borrowed for, what it was intended for, where it went, how it was spent, who oversaw it? Does the CBN, even in the situation Nigeria finds itself in, such a tight fiscal and limited space, is the CBN able to borrow this money without any form of oversight or responsibility from somebody being able to say, stop, wait, what is this for? How has it been used? What do we know about these funds?
I mean, we only know as much as is made available to the public. And of course, information is in layers, and access to that information is also in layers. So first and foremost, Nigerians need to be very honest. You can't know everything happening at that level of apex engagement. Also because the subject of currency right now is at the heart of national security globally, everywhere in the world. That's why there's a lot of kickback with crypto markets and many engagements. All right, money laundering and all these likes. There are many big ticket issues on how currencies are now at the heart of national security. So it's almost like Paul and Peter's situation. You can't separate one from the other. That said, within the realities of how the central bank also moved out of the core, you can safe to say that many of those transactions have been either intentionally aided or unintentionally aided by the fiscal authorities as well, because it's almost impossible that those heavyweight transactions were moved into the country without some form of intentional or unintentional support, as the case may be. And sometimes legal or institutional frameworks in context to how apex institutions work as well are designed to enable those leakages in one way or the other, especially for third world countries. And when you just oppose that with the fact that there was within those years 2 recessions, a pandemic, and the likes, and there was heavy weight on quantitative easing, huge money supply back into the economy, the need for recovery. It's safe to say as well that the narrative also supported that lending at a particular level. Another angle you can also look at it from was knowing fully well that our fiscal revenue positioning was not healthy over time or has not been healthy over time. The argument would have been looking for more creative ways to secure lending options within the times we live in, and that would have also necessitated lots of these transactions that happen as well. So, um, not to say, actually, my argument here also is that many of these transactions at a global level are happening in many other central banks because now currency is now the new norm for national security engagement in many cases, if you understand what I mean. So you can't necessarily separate the central bank from dealings with big high-end investment private sector banks in the world today, especially from and also from globally recognized banking institutions like the Fed, ECB, and the Bank of England and the like. So you can't necessarily separate, all right, the place of central banks in independent countries from these interconnected levels of financial activity ongoing in the world. And this interconnected level of financial activity has been booming since 2008. All right. So there are very gray areas for argument, in all honesty. But taking also cognizance of the fact that leakages are becoming a big norm in Nigeria. And when you just oppose that with the fact that the central bank is delving into areas that, conventionally should not concern them as an apex monetary institution.
Securitization earlier, and I want to talk about that right now because what we found is that the group entered into a securities lending agreements with Goldman Sachs and JP Morgan, and as part of the agreements, the group pledged its holdings on foreign securities in return for cash. Now, there are a lot of financial experts who are saying that this move has been a completely reckless one. Do you agree with that? Because I also want us to touch base with the special investigator before we wrap things up with you today.
Yes, I mean, highly possible. It could be viewed as reckless, but one thing I know for sure is that there are many other deep woven narratives that may have aided that transaction or the securitization of these assets for or against, either way. So, safe to say that we don't have a complete story yet. But I'm definitely for sure that there are many other arguments that have aided that transaction for or against it. Let's not forget also, Nigeria went through 2 cycles of recession and a pandemic within that period. So, you can't really tell the end to which, these arguments or these transactions or these securitization of assets were facilitated for what reasons, to a large extent. Yeah.
Mm-hmm. All right, so we also know that the CBN owes another 3.15 trillion naira, around $6.3 billion in foreign currency forward, which are forex obligations it needs to make to foreign investors. That's really tied around a lot of our debt conversations. But how does the market perceive this debt in terms of the implications on investor confidence? What do you think those implications would be? And is there the potential that the CBN may need to make some adjustments to its monetary policy as a result of this particular debt?
Yes, it's actually worrisome to a very large extent because, and sounds a bit counterproductive, all of these narratives that are popping up right now just shows that lots and lots and lots of, parchments when it comes to monetary dealings with investors, overseas and even locally have been underway. And this has a huge risk negatively for investor confidence. To a very large extent, you will assume that your external reserves has a huge share or reflects the productivity basis of your local economy, which again helps to encourage or spoil investors' confidence, especially when the right monetary policies are in place to facilitate that. However, we've seen that the construct of these external reserves have been built around transactions that are, quite questionable, and individuals do not really have a very, very strong clarity around how those transactions came to be. And it looks as though they were also trying to manage for the downside of the fiscal failures in many cases, which there is a strong pattern in there if you look very deeply into how these elements have worked over time. So I do not think that it's going to work in favor for us when it comes to investors' confidence. Yes, I agree that lots of monetary policies are going forward will have to be in place to sort of right these wrongs. And again, working very closely with the fiscal policy to ensure that the image around the financial sector, the investment landscape in Nigeria, or the perceived investment landscape in Nigeria does not backfire in one way or the other. Yeah, but to a large extent, this doesn't in any way support or facilitate further down the line investors' confidence in the Nigerian economy.
All right, so let's expand this a little bit before I let you go, Gospel. So these audited financials are coming out now, and this is also coming out just a few weeks after the president appointed a special investigator specifically for the CBN. Now, the president directed Mr. Obazi to immediately take steps to ensure the strengthening and probity of key government business entities and to also block leakages in the CBN and related GBEs. He's also directed to specially investigate and provide a comprehensive report on public wealth currently in the hands of corrupt individuals and establishments. So we know that the CBN is the first of the special investigators' really main targets. And with this report coming out now, do you think it clearly shows up the scope and the challenge that he has before him when it comes to really getting deep into what's happening with the financial management at the CBN?
Yeah, I think it shows the potential of what's ahead, the possibilities as well of what's ahead, and maybe, like you rightly said, the scope or the range at which that scope exists as well, especially as the investigator goes around with his dealings. Then again, the big ticket questions around what are we trying to also build a story around? Because let's not forget that the more elements we don't want to see are being uncovered, it may really water down on many other elements, for instance, investor confidence and co. So yes, these investigations have to be done because the economy really deserves a cleanup. And you cannot necessarily reform an economy without having to find out where exactly the leakages are existing and what type or nature or scope in which those leakages exist to start with. So this is necessary as a kickstart. However, I would expect these activities to go in line with the necessary reform policies that would show a sign of confidence in the system to say that these are 1, 2, 3, 4, 5, 6 elements that we are putting in place to ensure that A, B, C, and D happens in the next 3 to 4 years. So the story has to be carefully woven in such a way that our media or our the narrative is not really built around these institutional failures to a large extent, because we've had a lot of that in the years already. So it's a very careful bridge. The argument is, how do you manage all the balls in the air without necessarily crashing one or two of them? And I think that's also the thinking that Mr. President has to also look at very closely, with all the efforts he's built as well since May 29th to retain investors' confidence. That has to put in place vis-a-vis the reform actions that also needs to be in place as well as these investigations are going on.
Right now is, of course, the Naira. It closed out on Friday around 950 Naira to a dollar. Many are expecting that probably sometime today it likely will hit 1,000 Naira to a dollar as it is right now. And many are saying that the CBN's managed free float, because the CBN did come back to clarify that this was not just a free for all or a free float on its own, but it was meant to be a managed free float, is actually eventually just going to crash in no short time. As we're talking about reforms or the President Tinubu needs to do, are we approaching this Naira dollar situation the right way, in the best way even at this time that we find ourselves? So we're hearing that scarcity is hitting banks as it is right now. Of course, we've seen the situation with importers for PMS and expectations that the price is going to rise sometime this week. But now expectations that the Naira may hit 1,000 Naira by the end of this day. Are we doing the best for the Naira and the dollar? Very quickly, Gospel.
To be very honest, I don't think we are. And I don't think we're anywhere close to it. Every country, or the productivity or the value of any currency in any country, is built on two legs. Number one, the productivity dynamics in that country. Right now, we know that we are really at ground zero of that, when it comes to the real productivity dynamics in Nigeria, all right? Number two will be, how are you, that's a necessary condition. The sufficient condition, which is number two, will be, how are you institutionalizing that productivity and ensuring that at the heart of regional engagements and international engagements, you are lobbying enough for the positioning of your currency. I mean, on those two legs, we've lost it. All right, what we're trying to do right now is able to secure enough supply flow, or fixing the leakages around the supply side, which I don't think we're doing fast enough. So when you compare that to the pace of demand, it looks as though the currency is on a free fall, because the law of equilibrium states that you need a level of weight on the supply side to match up with the level of weight on the demand side to find an equilibrium price, or that is the exchange rate in this situation, that works for stakeholders in that economy. Anything much more deviating to the south would be literally putting the average Nigeria at further risk than we are right now. So I won't be surprised if the Naira hits 1,000. The pound's already hit 1,200 in less than 8 weeks. And that is really, really shocking to find. So the idea of unification is at best a perception value to spoil investor confidence. But it's not enough. You also need to fix the core fundamentals of productivity and institutionalizing that productivity to achieve what you want to achieve in the mid to long term. I do not think that working the supply side only, give or take, in terms of closing leakages, that's the activity that's being done now, will bring the Naira back to a reasonable position. It borders heavily on productivity.
All right.
And that's why you find out that the dollar, pounds, and euros are still the strongest globally in the world today, because those economies are primarily productive, aside every other institutional engagements are happening.
Gospel, as always, you know what I say, this is a continuing conversation. It's not going to be a one-day, a one-segment conversation. It's one that's going to continue as we expect to see more information come out, not just from the private investigator, but as we digest the audited financial statement coming from the CBN. So we look forward to having you again.
Thank you so much for having me. Have a great day and week ahead.
You too. Thank you so much. All right, so we're going to take a quick time out right now. When we come back, we have international headlines. And after that, more on African economies and how they are faring when it comes to credit downgrades and, of course, high interest rates. Stay with us.